Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for the week ending on was it February 6th.
Yeah,
So we got Ian here, joined by Joseph again, back-to-back weeks.
back to
So
back weeks. Yeah,
we're recording this Wednesday afternoon, so the afternoon of February 4th. We record this sometime Thursday, sometime Wednesday. We got a bunch of changes in some of our rankings that we wanted to hit on. There's definitely been a lot of movement across the market over the course of the past few days, past couple weeks
yeah,
specifically. We're looking today, markets are not having the best day, especially on anything related to I would say.
yeah.
Is getting beat up pretty bad over the
hmm
past couple days. So I felt it was important to get on and talk about a few things. But before we get into maybe some of the AI, US equity, all that type of stuff, we talked last week about areas of improvement outside of the US.
hmm
We'd seen some improvement in gold and silver, some weakness there right
Yeah,
after we had that podcast, some pretty interesting back and forth moves. We've also talked a little bit about international, and actually with market action through Tuesday, so through February 3rd, we saw international jump up to the top of our Dolly asset class rankings.
hmm
First time that that's happened since 2023.
yeah,
So we've seen a lot of improvement international, consistent improvement
hmm
over the course of the past year, finally in the top spot in February. Um, not, it was, I mean, I was good to see it there. Surprised it wasn't there sooner, maybe, but
It's been like a slow creep up.
yeah,
It's been kind of tough for it to steal signals from domestic equities just because domestic equities are still doing really well,
right.
right? So it had to kind of slowly pick off some from small and mid caps primarily, I would say. Um, but I mean, they've looked really good, like we talked about last week. I mean, the dollar's been in a negative trend. Falling dollar environment for a while. That bounced actually since the last time we talked a little bit back into X's, but still on five consecutive sell signals. So a lot of tailwinds there for
Mhm.
international. But finally, knocking off domestic equities in the top spot. Now, we'll say that it is tied in their buy signal count, so that could flip after we talk. By the end of the week, that could change
Yeah,
again.
it
It's
could. They
close.
both 290 signals. I will say, I don't think domestic equities is picking up any signals today.
Probably not.
Probably not gonna. You never know. Never say never.
Could steal something from silver, maybe.
We're recording this around 2:44, so we still got an hour and 15 minutes of trading for something to happen.
Yeah.
But yeah, tied and buy signals 290. When we get ties and aggregated buy signals, basically the way it works, the buy signals are focused on the long-term perspective. We look toward the near term for the tiebreaker, the
Yeah.
X column, and international equities has shown more near-term strength, so it gets the top spot, even though it's technically tied
hmm
when in the display signals. But that's why you see international in that number one position.
hmm
Strength in international. I mean, we talked some about it last week. It's been a lot of improvement in Latin America
hmm
recently.
hmm
You've seen Chile, Peru, Brazil all see notable improvement over
Yeah.
the course of the past several weeks. Those areas are getting extremely overbought, though.
Yeah.
I mean, you're looking at some of these funds. I was looking earlier this morning. ECH, the iShares MSCI Chile ETF, 130% overbought, near perfect 5.97 fund score. Looking at EPU, the Peru ETF, stronger 5.98 fund score, also more overbought, 147% overbought with movement through yesterday. Even when you get into Brazil, right, EWZ, 5.92, not quite as high as the
Yeah.
other two, 94, only 94% overbought. So
It's
it's
more
nothing.
acceptable.
Right. Now, all those areas are down at least a couple percent, at least at the time of this recording on Wednesday. So you might get some consolidation there. I mean, that could ultimately open up some opportunities. Brazil, EWZ, setting up what looks to be a pretty good shakeout pattern.
Potentially, I was thinking the
It,
same thing.
so it's formed a double top up at 38.50. If you get a sell signal at 36.50, then all of a sudden you're looking toward a reversal back in X's for your buy point on that shakeout pattern. Could be an interesting thing to keep an eye on there.
Yeah, and then that trading band will move up as well over time,
Right,
becoming
exactly.
more normalized. So you get a little pullback in price and a pullback in time as well.
Right. Yeah,
Um,
that's a good way to put
so
it.
uh, you know, I mean, generally speaking, it's been great for international equities, continuing a really strong last year. And then, kind of an aside, like we had our FSM seasonal
Mhm,
evaluations.
mhm.
A lot of our most popular models, like the T Row or the Vanguard, picked up a lot of international exposure. Now, a lot of it is also global exposure, which makes a lot of sense because we do see, even in Dolly, domestic equities and international equities both there kind of tied at the top. well above the other four asset classes that we keep track of there. So just kind of a broadening out of world equities, which is
Yeah, I think so. I mean, Steve
interesting.
was saying yesterday that's the most international exposure he'd seen in the past several years, right? I mean, you got to go back to like the origin of the fund score models in the 2000s to see
Hmm.
that kind of international exposure there, right? Back then, there weren't as many international funds.
No, and if you look at the asset class group scores, all global, international, diversified, highest score on that group since the mid 2000s.
Wow.
So it's been about 20 years coming
Right.
since we've seen international really do this well for this long.
Yeah. And I think that brings up an interesting point because we've seen other periods or the past few years, I mentioned 2023, where we had international equities moving to the top spot in Dolly. They had
Hmm.
a kind of a quick run up, didn't hang around that long, 6 months or so, and ultimately moved down to that top spot. We didn't see the same magnitude of improvement on the group scores page then as we are now, right? Because we talked more about the consistent run that we've seen from international equities. I
Hmm.
mean, that's more conducive to the score too. It just
Yeah.
has a stronger general technical picture there. Maybe it has a little more staying power at the top of the
I think that's definitely, I mean, that's what we've seen, right? Like even
right.
the first 6 months of last year, I was like, oh, international is picking up again.
It's
Well,
back again.
let's see if we can buy it. And like by, kind of the start of the third quarter, I was like, okay, well, this looks like it actually has some staying power.
Right.
Um, and when it comes to like international equities, competing with the broad domestic equities group, it also gets to compete against small and mid caps, where large caps, I would still say kind of like long term, still hold a leadership position, but from international, nowadays they're actually starting to really compete with the large cap US market, not
Hmm.
just out competing small and mid caps, which is interesting to see.
Right. Because when we're looking at this relative strength perspective, yeah, we had ACWX outpace the S&P last year by the widest margin in 30 years, right?
Yeah.
Um, but we'd seen so much outperformance from the large cap space within US equities. When we're looking at relative strength charts, one period of outperformance is not going to undo 20 years of underperformance, you know what I mean?
Yeah.
And so you need it to be consistent and more
Hmm.
consistent. I mean, a year is a long time, but in the grand scheme of a 25-year investing cycle, it's not that long.
Yeah.
And so if we do, I mean, it does seem like historically a lot of the improvement from international equities have been on kind of, I would say, more hopeful
Yeah.
news. It seems like there's some more general thematic shifts going on across the landscape of investing globally,
Hmm.
which maybe that provides some further tailwinds or just more assets staying in international countries instead of everything flowing to the US. And we'll see how that kind of plays out
Yeah.
um, moving forward. But it hasn't, do want to make one thing clear. You brought this up. We've seen international improve. We saw international equities ended 2025, I believe, let's see here, at 279 buy signals. It's now at 290, right? So it's seen 11 signal improvement. Domestic equities ended last year at 296. It's fallen to 290.
Yeah.
So we've seen improvement from international. It's not that it's doing that much better. It's just we've just seen a back off from
Hmm.
domestic equities, really, right?
For sure. And then that kind of ties into the stuff that's been struggling today, specifically is like the AI tech related names in the US have really struggled.
Mhm.
Um, I mean, not so much today. Microsoft's actually up a bit today, but Microsoft's really struggled, right? Kind of hit that high at 552, is now all the way back down to 416. No, that's kind of that's a bit closer back to its positive trend line than it was before.
Yeah.
But I think the big thing here is it took out its 2024 high and is now trading below that level. So usually when you take out those big resistance points and get back, make a new all-time high, you don't want to see it get back below that previous all-time high, which is what we see on Microsoft. And that's dropped down to a 3 for 5 or so. We're kind of in the hold territory right now, not necessarily running for the exits, probably depending on where your entry point is.
Mhm.
Um, but a bit of a concerning picture. It is heavily oversold on a weekly basis, but um, you know, like we talked about last week, where overbought can get more overbought, more oversold can get more oversold.
Yeah, I mean I think that's an important thing to keep in mind. I wouldn't look toward the overbought oversold as necessarily like an indicator to buy or sell,
Yeah,
more of as like a timing, like a supplemental piece of information, right?
yeah,
Like you said, overbought can become more overbought. Oversold works the same way on the downside, especially when you're getting stuff like you don't want to be catching a falling knife, right?
yeah.
So it is, yes, it's a 3 for 5, or yes, it's Longer term technical picture is still technically intact, right? It's not a low attribute name,
Yeah.
showing a lot of weakness, and we don't know how long it's going to persist, right? Stuff that was a two, if something goes from a five to a two, it has to be a three first. So maybe Microsoft's going to go down there, right?
Yeah,
Um,
and I just realized should have done this, looked at this before. It gave its first RS sell signal. Um, since it went back to a buy signal in 2015. So ended a decade-long streak of being on an RS buy signal
wow,
yesterday. So
not great.
that's not
And we
great.
saw that across a lot of, when you're looking at the broader Dolly sector rankings,
Yeah,
we rank the 11 sectors the same way we rank the six broad asset classes, right? Except on a separate ranking. I mean, you had communication services lost a signal yesterday, it's still in the top spot. Industrial still second, it gained a couple signals, basic materials unchanged. Tech dropped 10 signals yesterday
mm.
alone.
Probably going to
Um,
drop some more today
it's
too.
probably going to drop some more today. Yeah. I mean, and it's fallen significantly. It ended last year in the top position at 202 signals. It's now at 175. That's
Hmm.
27 signals lower, falling from the first spot down to the fourth spot in the rankings. That moves it in from an overweight into an equal weight
Yeah.
classification. Um, so we're seeing now it's pretty close to basic materials. I mean, the space has been volatile, but we got to call it like it is. It's no longer an overweight area. And a
Yeah.
lot of Microsoft's not the only name that's showing some weakness, right?
No, not at all. We look at NVIDIA, that moved to a negative trend today, actually. Had been in a positive trend since May of last year. And I told that to you, and you said, yeah, pretty much like everything else.
Well, the only thing there, like you saw it sell off, and then on April 7th, April 8th, it all shot right back higher,
Yeah.
right? Right when the tweet went out to buy, it was
Yeah.
up onto the races from there. But then you brought up a good point. It moved back to a positive trend last year, moved higher until August. It basically just it's moved
Just
sideways.
chop since for the last 6 months.
8
Yeah.
months. I mean, that's or 6 months. Yeah, that's math, which is great. That's why we let system do it for us. But yeah, 6 months of just sideways movement. Um, I mean, it hasn't been shown a lot of weakness, but on a relative perspective, not been doing as well.
No. If you want a silver lining, there is a lot of support here from 165 to 175, let's call it. And
That
right now we're at
166 level on the
172.
default chart, it looks really important.
Yeah. Yeah.
After
If we
that, you
get
move
below
up.
that, I mean, that's like the bottom of the consolidation period over the last 6 months. So you start slicing through that. Um, I mean, there's some support, but not well tested support below that. That it gets a little
Yeah.
hairy.
We got support at 172 from December. We got support at 170 from, what is that, November?
Hmm.
Um, we got support and September of last year. And then August, September timeframe, July, August, September timeframe, a lot of support down there at that 166 point. But it's not in oversold territory. I mean,
No.
you mentioned Microsoft, it's the bottom of the trading band, and Nvidia's not, right? And so, I mean, it's still a four for fiver toward the bottom of its range that it's been in. But when you're looking at it from a 10-week trailing band, it's not what we would technically consider to be oversold. So
Yeah, moving to a negative trend is one of those where, in terms of like tech attribute importance, I usually say like the trend is edges out a little bit on the most important side.
trend and market relative strength are the two most important things, I
Yeah,
think.
just because if you're in a positive trend, usually things are going pretty well, right? If it's in a negative trend, things can get hairy real
It's
quick.
1.3% away from reversing down into a column of X's against the market. So that hasn't even happened yet.
Hmm.
I think that's an important point to note. In this massive run that we've seen a few reversals in there.
Hmm.
We've maintained a buy signal going all the way back to when was that? 2024, 2023. Um, but it's we haven't even gotten a reversal down into a column of those yet. So I mean, I think that yes, it's weakening, but I wouldn't say it's dire by any means. It's still a four for fiver. Even if it reverses down into O's, you're still a three for fiver at that point.
Hmm.
At that point, it would be a two because it would fall to a negative trend today.
Yeah.
So yeah, I mean, things are definitely not dire, but they're getting bad for NVIDIA, at least from a strictly technical perspective.
Yeah, I mean, I would set an alert on that if it drops to 164,
Right.
on that chart just to be notified. Like we took out all that support.
Set an alert on that. Set an alert on the attribute.
Yeah.
You can set alert on decreasing attributes. That way you don't have to set an alert on the X column, the signal, that you can just set alert on the specific price level to monitor that. 166 support, if it falls to 164, and then also the attribute, I would say, because it's going to fall to a 3 today. If it moves down into O's, all of a sudden you're down in 2 for 5. That could happen pretty quick.
Yeah, for sure.
Um, so, um,
And
the
these things they typically move faster to the downside than they do to the upside.
I
Yeah.
mean, they moved pretty quick to the upside for a while there.
That's true. That's
It,
fair.
it,
Maybe NVIDIA is a bad case example of that.
Well, I
But
mean, some other names have shown similar thing. Palantir, right? I
yeah,
mean, Palantir was the darling of the S&P and the India. Like it was just everybody's favorite stock last year.
yeah.
Let's talking before. I mean, I've tried to really dive into what they do. Like I could give you like a general elevator pitch, but
Hmm.
like I don't know what they're actually doing in the office. Like I
Yeah,
don't know what they're doing on a day-to-day basis, right?
yeah,
And the stock has not had a good start to the year. I mean, it's down 11% before today's move, and today down another 13%.
yeah,
Um, you're looking now at 5 consecutive sell signals there on the default chart. Um, it's shown a lot more weakness in a lot of other areas. Extremely volatile, almost 7 times more volatile than the market from a standard
hmm
deviation perspective. That R risk score 6.88. That means yeah, standard deviation is almost 7 times higher than the S&P, which is wild.
yeah,
But you're seeing that today, volatility to the downside pretty sharply.
yeah. And one thing I will say is Palantir was in a lot of our models and then kind of got kicked out of them starting at the end of last year.
Mhm.
We did see a lot of the relative strength start to kind of come out, even though the tech attribute was still really strong at that point. Um, but if you're following those models, or even if you're not actually like following those models in terms of like matching the trades, it's most of those are month end. It's nice to just go look and see what's getting added
What
and
models in
clicked out.
particular?
Um, I know the multi-factor model. I think the NDX
NDX
model
models
sold
too.
it as well. Yeah. Large cap core model may have sold it. I think it may still be in the large cap core right now, but the large cap core actually picked it up really early. So I think the returns from that position are still pretty strong.
I mean, but that bring yeah, sold NDX model sold Palantir end of November. So yeah, good
Hmm.
memory. But that brings up a good point that like you're looking at this like, oh my God, that's so volatile. Well, sometimes some of that volatility can work in your favor on a relative strength perspective. If you see
Yeah.
it, I mean, it's relative strength. So even though Palantir it moves around a lot, maybe it's not down as
Hmm.
significant, but it may other stuff moving higher. It's like, hey, well, it's going sideways, going lower, volatile. Let's move to something, kick it out, and move into something else, right?
Yeah.
Um, and so that's where maybe if you're having difficulty playing a name like Palantir that just moves around so much, looking toward that kind of rules-based, model-oriented approach has at least done decently well for Palantir over time. Model bought it at 82, sold it at 168.
Yeah.
Not a bad move there.
Yeah, and the important thing is too, like, the high was roughly around 200. So we did take a little bit of a hit on the downside
You'd
before we
expect.
sold it, but that's exactly what we're trying to do. We're trying to catch 80% of the move, not from, right at the bottom to right at the top. We're trying to catch just the bulk of that move.
Right, right.
So you're never going to get the perfect entry or the perfect exit necessarily, but through that kind of rules-based approach, we can just make sure we're not um, buying really poor names and then selling strong names.
Mhm. Uh, yeah, and I think, I mean, talking about names that in the general tech space, another name that reported earnings, I don't think we talked about was Apple.
Hmm.
Apple's up 2% today.
Yeah.
It's still sitting on multiple consecutive buy signals, been on a buy signal since April of last year. You've rattled off 5 consecutive buy signals. It's in toward the middle of a trading band. It's a pretty darn good technical picture, especially when stacked up against all this other stuff that we're
Yep.
talking about going to the downside. Apple got a lot of flack for a while there
Hmm.
about not fully adopting AI. Maybe they made the right call to kind of sit on the sidelines a little bit and let some of this stuff sort itself out.
Yeah. And you talk about Palantir with a 7 times the standard deviation of the market. Apple's at, an R risk of 1.8. So, less than 2 times the volatility of the market. So it's kind of quietly done really well over the last few months. Now it is essentially flat this year,
Yeah, it might be up
but
like
I
a
think the
percent
market
after today's
will. I
move.
think that yeah, after today's move and then the market being down, actually might be beating the market this year. But 5 for 5 are been the case for for quite a while.
I mean, there are going to be areas. Not every mega cap is entering a negative trend. I mean, there
Yeah.
are things out there that are doing well, and that's where I mean, filtering through some of the stuff can help pull that out.
Hmm.
And we'll see what happens to Apple. See what happens to the rest of these names. I mean, I think the move that we've seen in speaking candidly, I don't think it's any shock to any. Like, it seems a little overblown
Yeah.
over the past 2 days, right? It just has a lot of us scratching our heads, like, why is these names down so much?
Yeah.
Um, Maybe there's something else going on behind the scenes. I mean, the price movement will oftentimes dictate that before it actually we know
Yeah.
what happened. Um, Hindsight's always 2020, but we've seen some stuff moving around. I mean, the decline in technology matching up with the decline in domestic equities, seeing strength in international equities. There are other areas to move around to, right? So it's just following the signals, following the trends, moving into those areas of strength, and then staying out of the stuff that's not strong.
Yeah, and it's one of those markets too, like, if Apple's up 2%, it's not like one of those situations where everything's getting sold off, you
Right.
know. Um,
Good thing.
yeah, and we've seen some like lesser weighted sectors in the S&P start to do pretty well. We
Yeah.
mentioned basic materials moving up into third. Not a heavily weighted sector. Really, it was like the precious metal miners that were keeping that sector up, but it's starting to broaden out quite a bit. We have a piece of the report coming out this afternoon about the improvement there. Industrial still look pretty good.
Energy.
Energy's really started to pick up.
XLE up 15% year to date before today's 2% move.
Yeah,
4.45 fund score.
yeah.
And what
I think we
energy
talked
is.
about that last week too, didn't
Yeah, I think we did. We're just gonna repeat it. But yeah, I mean, if we've seen energy move up in the dollar rankings
we?
too.
Yeah.
Those dollar rankings tend to be pretty. I mean, they're not going to work every single time, but they're good general
Roadmap.
sector indicator to follow.
Yeah.
Whether you're trading off of them, whether you're using them for perspective on market action, it's
Hmm.
a good thing to set alerts on
Yeah, for
for
sure.
sure. Cool. Well, I mean, we can keep running through stuff that's going up or down. Do you have any other?
I don't have anything else. I mean, we still have some more big tech earnings. We got
Yeah,
Google, Amazon the rest of this week, and then, like we said last week, always waiting on NVIDIA.
always waiting on NVIDIA. Yeah, maybe earnings will pull it back up, but Google, Amazon, both. We won't. We're gonna run through each of those, but at least for now, they both have favorable tech attributes. Um, we'll see what happens after earnings. Interesting that they're not showing as much movement with this. I mean, neither of them down more than 2%, 3%. They're not showing as much movement as some of these other areas that have already reported, and maybe the market's a little more worried about.
Yeah, it seems like the semi space has gotten hit pretty hard.
Yeah,
AMD and Micron are down quite a bit today.
yeah.
So we'll see how that shakes out for the rest. I think when we talk about stocks like Palantir where the R risk is like 7,
Hmm.
you're gonna get these days where it is moving a ton.
Right.
That's just like
You got those days to the upside in the
you
past.
got those days to the upside and you're getting into the downside too. So it cuts both ways. But I think like we talked about, I mean, sticking with the tech attributes, having a good plan in place, makes it a bit easier to digest those moves when they do happen.
Cool. Cool. Well, with that, we can probably leave it there, Tuz. So thanks for joining.
Yeah, great.
Thanks everyone for hopping on again this week. Reach out to us. Let us know if there's any other kind of questions or anything that you have at NDW support, NDWSUPPORT at Nasdaq.com. More than happy to take a look at anything for you there. So thanks for tuning in. We'll be back, touch base on other stuff next week.